Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Welcome to the September edition of the Yankee Model Investment Club meeting. My name is Brent Gall. I'm the president of our club, and I will walk through some introductory slides in case this is the first time joining us, just going over the structure of the meeting and with some links to further information that you can partake in if you're so interested. And then after I wrap up, we'll jump into our standard agenda. So as a form of introduction, Yankee Model Investment Club is a better investing model club, which means we're a fully functional investment club using real money, but we are open to observation by the public. We're formed back in 2008, currently with 6 members spread across 4 different states. We went fully online back in 2011, and we meet monthly on second Saturday at 11 a.m. Eastern. We're always looking for new members. No investment experience is required. We offer a mentoring program so that any members are paired up with an existing member to answer any questions and kind of guide them in doing stock presentations and such. And really, there's no limitation on where you live, except where your state tax laws require the club to file a return. All partners must be members of Better Investing. You're expected to actively participate in the club's activities. This isn't a passive investment vehicle, and make presentations using our stock selection guide and analysis template in rotation with the other members. And from an operations standpoint, our club follows better investing principles. We all show respect to our fellow club members. We have to remember we're all still learning at this, regardless of when you started investing. We perform an annual audit of finances. We file taxes promptly, and we follow our partnership agreement and bylaws. So if there's any questions you have that we don't cover, if you're interested in joining, feel free to reach out to our secretary, Sriram, at the email address on the screen, and I will put his contact information up on the screen again at the end of the meeting in case anything comes up that we don't cover through our discussion. For the structure of the meeting, we follow a standard agenda, which should be available in the handout section of the GoToWebinar control panel at the side of your screen. In that same section, there's a couple of other handouts for reference that you can use and follow along. During the meeting, all of the visitors will be muted, but you can type in questions using the questions box in the GoToWebinar or GoToMeeting control panel. Joe is our moderator, and he'll be answering those questions. And if it's a general interest topic, he usually speaks up and talks through the question and answer with the entire audience. And we'll also be open for some additional questions at the end of the meeting if we don't cover everything. A note on invitation and being registered for this meeting series. If this is the first time you're joining us and you were forwarded an invitation from a friend, just know that we likely don't actually have your contact information. So to make sure that you're on the meeting series and get automated reminders to log in with the login information, we encourage you to register for the meeting series at betterinvesting.org in the local events section. You can sign up and you just get a week ahead of time, a day ahead of time, and then an hour ahead. You get an automated email saying what the meeting time is and the login information. And then finally, just a general disclaimer, we're going to be talking about financial topics in this call. We are not financial analysts or financial planners. Do not take anything that we talk about here as financial advice. Do your own research before spending your money and making any buy or sell decisions. And with that, we'll jump into our standard agenda. We start off with a small educational segment each month, and this month it'll be portfolio analysis by Sriram. And I'll give presenter rights to you, Sriram.
Ron, we're not hearing you.
Yes. Can you see my screen?
Yes, sir.
Yes.
I don't know which screen you're seeing. Let me.
We saw one with a moon on it.
Okay. Let me see if I can manage to get my slideshow on here. No, Kim. Can you see the presentation now?
Yes, sir. Yes, sir.
Awesome. So, good morning, everyone. We were talking about the PERT analysis and report, and one of the items that I thought I would like to present and see if we can observe within our club portfolio management is something called this Torbuson portfolio management. He calls it magic, the process. But that's why I put this as part 3 of my PERT analysis that I started back in, I believe, March, and second one was um, in June. It so happens every 3 months I get to do this. I'm going to skip through some of the screens. Sorry about that. So most of you have seen this. This is the PERT that we can generate from SSG tool, online tool. And you can see it gives us the whole portfolio at one go. And I think one of the things we can look at on the right-hand side, based on our initial SSGs, how we developed them compared to that, and what we projected versus what is happening today, it gives you a good picture of at a very high level. And then from the summary report, if you go into the detailed report, again, it gives for each individual holding the whole information that we need to take a look at this. Again, a reminder on the left-hand side of this line, this dark line here is all quality information, and you have valuation information on the right. Having said all that, oh, by the way, I just wanted to acknowledge that today is 9/11. I didn't mean to skip, but I just wanted to let everybody bring the what something happened 20 years ago changed all of our lives. Having said that, going back to PERT analysis again, if this is the PERT analysis and the details. So this gentleman, Mike Torbenson, he's a long-time veteran investor. Apparently, he joined back in 1987, and he's been an active educator for a long time. He held positions at different levels within the organization, and he wrote this book called Stock Selection Guide and Portfolio Management Magic, with the subtitle How to Build and Manage a Growth Portfolio. If you like, I think it's about $20 or $30 or something like that. I don't know exactly the price, but it is a book that is well worth reading. When I brought this topic up, Brent clearly reminded me, saying that this is a complex subject that you cannot present within a 5 to 10 minute education portion of our sessions. But I'm not going to go in any detail, but what I'm going to show you is what he does using this portfolio analysis tool that we already have. He takes it to the next level. Based on a set goals, what we feel comfortable within our club, we can consider some critical items that we want to keep track of. So based on that, for each holding in our portfolio, we can come up with what is the quality of it. Essentially, he measures 3 different measurements. And what is the value that is giving from these stocks we are holding? And number 3, how these stocks are performing compared to what we are doing. So there is actually a spreadsheet that you can put this all together and use this portfolio review analysis tool to actually observe how some of our holdings are behaving. Again, these are screenshots from his book. I did not do it yet for our club, but if this is something that club members would like to see, I certainly would like to request that let's keep tracking of this. This will be another tool in our toolkit to actually make better decisions. Last month I was not present, but I have listened to the audio and watched the presentation. I believe Ira and Steve and actually all the members had a wonderful discussion on comparing 2 stocks, and we made a good decision about that. So this will be another tool like that. And if you're all interested, this is something we can conduct. This is one screen that will give you the whole review process into one screen. With that, back to you, Brent.
Okay, thank you. Just to clarify, this is kind of a way to distill down our portfolio information into like a 1-page summary and then compare to his, like, it seems like in the gray font is rules of thumb, or I guess the goals, so that we can compare where we stand with like the general good guidance of what to do, right?
Yes, and we can also, the goals, we can also select them and vary to what we please. For example, at the top, item number 2, estimated portfolio growth rate is 10%. We can say, okay, we want 12% and keep that as our goal.
Okay. Is there a lot of calculation required behind the scenes to fill out this sheet, or
No.
are the values pretty much presented from the PERT report?
I think we can compare values from the PERT and basically fill this qualitative sections of these two. So you're just comparing that. Based on that, you're pulling them together.
It generally takes me about 15 minutes to put one of these together, but I've done several, so I've become practiced at it.
Yeah, I think it'll take about an hour for me, Joe.
You'll get better.
Yes, but if this is something I think I would recommend. I know Joe is a big fan of this also.
I did it once for our club, and I thought it was pretty good. But so I agree. I think we should attempt to use this to make decisions. It basically comes up with a list of stocks at the end that might be eligible for purchase, or for additional purchase, or for sale, because of the way they're behaving.
Yeah, I think this would be great, and anytime someone volunteers to do work that I don't have to do, I'm always a fan of that. So yes, if you want to take a stab at
that I just volunteered? Oh no.
Well, I guess that's the other thing, is that what do you have all the information you need to populate this, or do you need anything from the individuals that are following the different stocks?
I believe so. I
I
think I
think,
have. If I need, I will reach out.
yeah,
Okay.
I think the PERT is the main key to this. And if we've got that going right, then you have everything you need there somewhere.
Yep.
Right.
I think that's correct.
I think just the one thing to keep in mind, I forget now when we did it last, but some of this is probably based on the analysis, the individual SSGs that make up the PERT. So we'll just need to be cognizant of when those studies were done or last refreshed.
Yes.
As far
Yes.
as judgment goes and everything. But otherwise, I think this looks very promising. So yeah, great. Would look forward to seeing what comes out and any piece of information that we can glean from it.
Very good.
Okay, thank you. Any other comments, questions from the team? All right, thanks, Sriram. Let's now move right into the club secretary report.
Yes. This is the notes from last meeting, which I was not present. But I just, like I said, I used the video archive and prepared these notes. There were 375 people registered, out of which 55 actually attended. Ira made a wonderful presentation on visual analysis. It was, I think there was a good discussion after that, and we came out with again, one more tool to look for before we go deep into this. And Brent presented minutes in my absence, and those were updated and passed. Jack presented report, and these were the holdings, the diversification report as of that day. And here is the chart. And Brent presented an SSG analysis for ITIC. Again, there was a lot of good discussion about it, and it was well received. And based on that, we made a decision to liquidate all the SN group and put that money into ITIC, and that's what we did. Individual members did make their presentations on their stocks they are watching. Nothing important or nothing that needs to be changed based on that. I still have your name as incorrect, Brent. That was from previous month. Again, there were some good questions, and meeting was well received, and about an hour and 45 minutes later, the meeting was adjourned. And this is the list of all the participants that attended the meeting. Any questions, comments?
Great. Thank you, Sriram. Let's now move into treasurer's report.
Great. Okay. Can you see the screen?
Yep.
The valuation report is here for yesterday, and we've got about $240,000 worth of assets, $1,500 in cash to spend today if we don't sell anything. And we're doing pretty good. There, we have two stocks that have slight losses. ITIC, which we just bought, and Superior Group of companies. Some of them, I just want to point out, are doing awfully well. So the Alphabet, I think, is getting close to 10 times, so we bought it for $1,600 and it's now worth $17,000 for one of the Alphabets, and the other one's almost the same. So that's 10 times what we paid for it. So that's let's try that again. I have Joe constructed for me a spreadsheet that looks at this same data in a different way. This is the guts of the thing, which is very ugly, and I'll skip over it. But the summary is here. Let's see if I can make this bigger. So we've got a list of the stocks we own and their weighted average return over the lots that we've bought over time, and we're comparing it with S&P 500, the SPY fund ETF, to see whether we're doing better or worse than the S&P 500. So as you can see here, we're doing better for all but 4 of our stocks. So Fleet's doing a little worse. We've held that a long time, and that's probably why. ITIC is doing a little worse. That's what we bought last month. SFM and SGC, which are more recent purchases, were doing a little worse than the S&P 500. So this is a way to look at an instant in time, anyway, to compare the way the performance of our stocks has been. So we usually look at just the weighted at the average return, or at the raw return, and this is a way of looking at how we've done compared to a benchmark.
Can I ask a quick question on this?
Sure.
Just for the SPY weighted average return, is that effectively like, instead of us purchasing 94 shares of CBOE, we purchased that same dollar amount of the Spider?
Yes, that's exactly how it works.
Okay.
Yeah.
Gotcha.
That's what all this ugly stuff up here is about.
Yeah, that's what the thought process is.
Yeah.
We do have a general question that we should talk about. Edward asked, at what point do you consider trimming the size of a holding? I see Google at over 14%, the two of them put together.
I think we have some rules of thumb, and we're not quite there yet with Google. I can't remember what the number is, 15% or 20 or something. Does anybody remember what it says in our bylaws, operating procedures?
I'd have to look myself. I don't remember. Yeah. I think I agree that we probably have a general guideline, but I don't know what it is off the top of my head. And it's one of these things where you're a little bit scared to trim away some of your high runners, but granted that that's why you have the rules of thumb and the rules, just so that you don't fall in love with the holding and then it plummets and takes all of your gains away.
The Torbenson methodology also provides some guidance that you can make changes to. I'm looking for it on Sriram's presentation. I'll find it in a minute. I know it's on there. Where is it? Down at the bottom. There we go. His guideline says that the largest sector should not be more than 20%, and the largest stock should be no more than 30% for the sector and 20% for a single stock. But that's his guideline. You would change it to agree with your operating procedures.
Right. We'll have to look up in our operating procedures, which are in the public folder for all to see, but it's something we should have on the tip of our tongues, and we don't, sorry. So that's it for this, for the treasurer's report. Oh, no, I'm sorry. I need to do some of other normal reports. Member status, I think we're all up to date. Yeah, we've all paid in this month, so that's good. Transaction history, we got a little, we got our usual penny, and we got we purchased 71 shares of Investors Title and sold 257 shares of Essent Group. And I think we got a couple of dividends. Let's see. Yeah, so we got DR Horton, Visa, SGC, and Tractor Supply dividends. So we're up a little bit in our total cash. Okay. Investment performance, I already showed you one version of it, but we'll look at this one. So these are the annualized rates. DR Horton's doing awfully well. Let's see where Alphabet is. It's 10 times what it was when we paid it when we bought it. 28% annualized rate of return. But that's over 10 years now. So that's a nice start.
The bottom three don't have numbers because they're new purchases.
Oh, yeah, so that we could show you to you, but they probably don't mean anything. Okay. Let's see. Member performance. So here's our percent holdings by individual, and here's our rates of return. Sriram and Liz are just doing gangbusters. Apparently, they've done very well. The rest of us are lagging behind. Okay. All right. I think I wanted to look at capital gains briefly to see where we are. So we've got about a $3,000 short-term capital gain to worry about in 3 months or so, and almost $7,000 in long-term capital gains to worry about. So this will be divided based upon those percentage ownerships. These profits will be divided based upon the ownership distribution at the time, and go to the K1s for each individual. Okay, I think that's it for the report.
I checked our investment policy statement, and it has no holding should exceed 25% of the portfolio.
So there we go. Okay. Thank you, Ira.
Okay, thanks, Jack. For the first report that you showed with the comparison to Spider and everything, what sort of work level was required to generate that?
Well, fortunately, Joe did most of the work.
Oh, nice. Okay.
Yeah, that was nice. And then, so I had to change the numbers for today and put in a line for ITIC, and that I figured out how to do that pretty quickly.
Mm-hmm.
So it doesn't take much time to keep it up once we have it.
It took about 2 hours to build it.
Okay. And then I guess the main updates would be a refresh of the prices, right? And then adding in any buy or sell decisions we make.
That is correct.
Okay. Okay, that looks very promising. I think, yeah, focusing on maybe the underperformers, and then it'll be interesting if that then dovetails with the analysis report that Sriram went over.
Yeah.
If it basically says, these are the same stocks to look at.
Yes. Yes. Good.
I have a question on the dividends.
Yes.
Do we do a drip program, or do we just take it in cash?
We take it in cash.
Thanks.
That's partly a treasurer relief effort so that it doesn't complicate my job. But partly it's because we want to decide to reinvest in the stock instead of automatically do it.
Mm-hmm. That makes sense.
Any other comments, questions on the treasurer's report? Okay, thank you, Jack. Let's move now on to the stock to study, which will be Cummins, presented by Steve. So I'll make you presenter.
Good morning, everybody. Can you see my screen?
Yes.
Yes.
Okay. Okay. So the stock today is Cummins Incorporated. Ticker symbol is CMI. They're on the big board. They're on the smaller size of a large cap. One could almost argue a large mid cap, 33 billion. So what does Cummins do? They make diesel engines, and in all sizes, shapes. I had always known them from the Ram truck engine, but no, marine, you name it, motorhomes. I was surprised, actually, at how pervasive the engine is, and it has a very good reputation. They're located in Indiana, in Columbus, Indiana. Their beta was just a smidge over the market at 1.05. Their debt is 4.4 billion. And as relative, let me bring this up. So it's about, I think we shoot for no more than 35%, I think, or 33% total debt to cap rate. So they're a smidge over that, but nothing to worry about, in my opinion. The percentage of inside ownership was 0.37%, and institutional was 84%. I got that from Yahoo. Is it a growth company? Mild growth. And really, what this thing is, in my opinion, it's very cyclical. They make engines, and so as the economy goes, this thing's going to go. So where did I get my future sales and my future earnings per share estimates? Right from Value Line. I took these numbers. This is exactly what Value Line had, 8.5% and 7%. Return on assets was 7%, and return on equity, a nice juicy 26.44%. So let's look at the price earnings history, and the present price is $233.32 a share. Now here's where we need to come clean a little bit, where I did some massaging of the stock study guide. Why? To put it in the buy range, of course. So and there you'll see they're very minor massages. So here's our 8.5 and our 7.0 that I pulled from Value Line, straight from that. And then here's a tiny massage. So because I buy the service, this all comes pre-populated for me. And I very rarely do I ever even touch it. But I really felt in this case that the selected, they had judged this down, actually, by a few. By a few, I think it was either 17 or 16. I don't remember the exact what it was. But what I did here was I went with the straight average, which was 19.3. And in my opinion, in the next 5 years, it's going to hit 19.3 all day long. That's my humble. So it's just a little one thing that I changed and to be totally transparent there. So the projected, the projected should be 7.69 at 12.5%. The peg on here, that I'm looking at this and this isn't striking me right. So we'll put a check on that for right now. If we go and we look at the peg, it's 2.1, and then the dividend here was 2 point, and then the spreadsheet rounded up, but it was like 2.485. So almost 2.5%. And I saw in Morningstar it was 2.35%. So I don't know if they had updated, but they had just raised their dividends this summer a little bit. So we're looking at the, excuse me. I guess we'll have to do this, shrink this a little bit. Okay. Okay, so what's the projected high price in the next 5 years? So we're looking at $403 a share. And the estimated low price I have at 186.40, and that's another thing that I tweaked. And I'll show you. So I only tweaked two things, and this is the second one that I tweaked here. So they had it at the forecast low price of 175.70 and 70 cents. So if I do that, this guy becomes actually the current price. And just by a few cents, he goes into the hold range. But I really don't think, especially in the short term, and the short term being the next 12 months, that this is going to go below 80% of the current price. And I'll explain why after, but a little bit later. But I really don't think it's going to. So I think this is fair, actually. And by doing that, it gets me to, it changes my range to 240. So 170. So I changed that to the 180, 186 here, 40. So the upside down is 3.6 to 1. The price target is going to be 403. The projected average return is 9.8%. The total return is 14.0, and the Altman Z. The measure of is this thing going to go bankrupt or not? And so, of course, the litmus test is your Altman Z 3.0 or higher, and it is. It's 4.2. So that's kind of the run through of the math a little bit. And so how did I find the stock? So mercifully, Ira was very generous, and he sent that spreadsheet that he has, and he was very kind to share that. And so my personal opinion is the market is frothy, royal froth. So what am I looking for? The most value company I can get. How do you find that quickly? Low PE. So what I did was I took Ira's sheet and I searched by PE, and I just ordered the sheet by price to earnings, the lowest to the highest. And so what was funny was we had actually purchased a lot of the stocks on the sheet. So the ones at the top, which we had bought, I didn't use them. And then also there were a lot of banks on the sheet, so I didn't pick any of those because I'm not confident in valuing a bank as well as just a regular company. And then what happened was a lot of the other companies why this company fell out was this was the lowest PE company that had decent financials, meaning the Altman Z was over 3. So that's how I actually picked it. And so, yeah, so here's some things that I really like that I wanted to share with everyone. Here we go. Yeah. I don't have to log in again. It's been too long. Well, we'll come back to that in a split second. So one of the things I really like is you can see here that the stock price is below the value line, meaning that it's undervalued. So also you can see on the sheet here that I picked the 8.5 and the 7.0 here. So let's see if we can get log in to here again quickly. Let's go back out maybe. Back out again. No. Back out again. And let's try it. Because I thought this was actually very worthwhile going to show. What I might do is I might just blank out my screen for a split second and log back into this. Yeah. Brent, can you take control just for a split second so I can get logged into this comfortably?
I think on your GoToWebinar control panel up in the upper right, it has like a pause button or a maybe stop button.
Okay, let me show screen. Here we go, pause. How about now? Am I transmitting?
If you try moving your cursor, it's stuck just at the value line screen. So I think we can see a frozen image still.
Okay, so let me just log in, and this will just be a second. I think it'll be well worth it.
Okay,
at least in my opinion.
While you're working on that, Stephen, you have 2 questions. Yeah. One of them has to do.
Go ahead. I'm sorry.
One of them has to do with chip shortage and its effect on Cummins engines, production and sales. And the other one has to do with your PEG ratio. Leslie got a little bit different number and she wants to know source.
Okay. So let me deal with the second one first. The PEG ratio. So that I got straight from the SSG. And so what I do is I purchase Stock Central, and Stock Central automatically pre-populates my SSG for me. I get the data feed from, is it Morningstar or anyway, they have some conglomeration that it just populates the sheet. And so that's how I got it. And I know it's high, but that's kind of the source of it. The other one, yeah, I actually think I have a bullet item for that in my spreadsheet lower.
Okay.
The chip shortage, and I'll get into that I actually have a bullet item for that to talk about. And
Okay.
I'm sorry, I couldn't do two things at once there. I'm still logging in. I apologize. This will just be another minute, and then we'll get going. There we go. Alrighty. It wants a nice fresh login. Okay, now we can start showing our screen again. Okay, Brent, can you see it? Did it freshen up?
Yeah, we can see your cursor move now.
Okay, good. All right, fantastic. Okay, so let's take a peek at here. And something that I really liked about this, financial strength. I'm Mr. Scaredy Cat investor and like Fortress balance sheet. So whenever I see financial strength A+, I like it. And oh, by the way, there's only two companies ahead of them, Deere and Caterpillar. And they're like number 3. So I like that a lot right here. So this is another big reason why I picked them. So I really liked it, them quite a bit. And I learned something this morning that I thought was interesting. I'll show this chart. So in the PDF, the company price is slightly below the value line. Here, this is more in real time because the PDF is frozen, and here they're exactly at, it's very hard to see, but they're right at the value line. So it went down a little bit, but I thought that was interesting, and I wanted to show that to everybody, that you can actually see the PDF in real time with this. I thought that was kind of nifty. I just discovered that this morning. Okay, what else did I? Yeah, so I like the value line a lot. Okay, and I showed that. Okay, so let's go into the question from the chip question. So this summer, my wife and I went to a new car dealership, and it had been literally 15 years since 15 or 16 years since we had been to one. And we went in and we said, okay, well, if we order a car, how long is it going to take? Oh, it's 6 months. 6 months? Yeah, 6 months wait time. And when I bought my truck in 19, I had ordered it like the last Tuesday in October of 18, and I got it in February of 19. So it took 14 and a half weeks, and that was when the supply chains were okay. So there's a massive, in my opinion, pent-up demand. People just, I guess what the normal course is, it must be a little bit of an impulse buy. People go to the dealership and they buy what's on the lot. Well, there's nothing on the lot. I think they had 12 vehicles or something. It was ridiculous what they had on the lot. So that there's no inventory. And this is part of the reason why I love this stock, is because I don't see this cycle, the sales cycle, drying up anytime, and particularly in the next, even though they're very cyclical, well, they're in the high part of their cycle. They're not in the low part, and it's gonna last a while. I hope that I answered that. Whether it be chips or whatever is holding it, it's just people can't get cars, and the sales for this is going to be high, in my opinion, for a while. So, and surprisingly, Cummins was actually diversified, and they make all kinds of engines, from motorhomes to marine to very large truck engines. also, I kind of, the sector I know the best is pickup trucks, and that I happen to be looking, and they actually made the strongest diesel engine for like a regular Ram 2500 or 3500, and they compete. They're actually they have a little bit more horsepower or torque, I guess, than the Ford engine and the GM engine. So they're independent, and so Chrysler, Dodge, Chrysler, and Ram, they're a little bit smaller than Ford and GM, who make their own engines from scratch. Well, these guys, they're buying it, so they have to be a little better engine, I think. And I think they do well with there. Let's see. If we go here and we do a Control B, whoops, Control B. That's not doing it. What the heck? There we go. Maybe I've got too many. Oh, maybe it was showing it below. Let's see. A Control B. Well, I guess it's not showing it, but I did it before, and we do the Control B on the SSG. It's 15%, and it boils down to $222 a share. I think this kind of just qualifies as a large cap. So some knocks on this thing. This thing is very cyclical. It rides the economy. So when people are buying cars, this is going to crank. When people are buying impulse buys, like a motorhome or something like that, it's going to do phenomenal. Or a boat. Some other knocks. Morningstar only has it 3 stars due to its valuation, and I wasn't thrilled with this. Not happy with this here, but I think that we'll blow that out a little bit. I think we can explain this in the sense that this is very cyclical. So, and here now you're seeing the big earnings here, and they're really starting to take off here, and it's starting to crank. So I think you're going to see more of this, especially over the next 12 months. I think it's going to do well. There was one big disappointment in this earnings. I think there's like a negative. Yeah, they actually took a loss, which is for me to even consider this. So they must have had some huge write down here, which I wasn't thrilled about. But every other earnings is positive. So they took a big write down, and then they've recovered ever since. So and they're on quite if we look at the momentum of this earnings, it's quite heavy. It's really starting to pour on. And I think that's the presentation. Brent, do you want to ask anything?
Yeah, thank you for that. Very informative. Out of curiosity, the dealership you visited, was that a Cummins engine vehicle?
No, it was. We went to a Ford dealership, and I think they literally had 12 vehicles on the lot, and literally the owner was driving a Mustang. And I was dying to see if I'm tall, right? So I wanted to see if I could fit into one. And he actually said, no, please get in the vehicle. I tried it out. That's how few cars they have.
Yeah.
So yeah.
So the clothes off his back. Okay.
Yeah, pretty much, or the car off his back, something like that. Yeah.
In general, I agree with the quality of the company. I mean, I've known Cummins. I mean, in my previous life, we supplied pressure sensors to them. So they're a great company. I agree with all the things you were saying. I think the one, and I was going to bring up the little toe stub before you mentioned it, that I looked at the quarterly, I guess, data chart in the SSG and noticed a negative symbol. I was thinking, oh, Steve's not going to like this.
Find that. No, I was not thrilled with that at all.
Mm-hmm.
Yeah, right. Yeah, right here it is. Yeah.
Right.
Yeah, awful. Yeah.
And I didn't look into that to know if it was like, was it at the end of the year, so it was some sort of financial buy down or something. But the stumbling block I had was just, I think, the current price versus price appreciation potential. I had the same growth rates estimates, I think, instead of, I think, what, 8.5 and 7.5 or so, I just did 8 across for revenue and earnings per share. A little bit higher than I would normally do compared to historical values, but it looks like that they're in a kind of a growth spurt at the moment. But my forecasted high price was right around 360, which I think you were at 400, which was a little bit richer than, I think Value Line just pegged it at, like, the high price they estimate is like 370 for the next 5 years. Which this boils down to, I have it in the whole range for me, just because it looks like that last year there was a bit of price appreciation, so that kind of pushed the max price up, higher than it's been recently. And like my buy is up to 191 currently, and we're currently $232 per share. And
yeah,
just
normally I'd agree.
Yeah.
Normally I agree 100% with your assessment that we're a little bit late to the party on this.
Mm-hmm.
But what changed my mind is why I actually reviewed it was because of the experience at the dealership, where there's just absolutely, my jaw drops when he said, well, we want to put a car or 6 months.
Mm-hmm.
So this is going to take a while to get out of the chain. So I think that, yes, you're right. We're a bit late to the party, but I think the party's still going to keep going, to put it in a way like that. Yeah.
So then I get that's a good topic that when you were mentioning that earlier, it made me think to myself, well, does that mean that they're possibly going to lose out on sales? If in your case, I guess I would question you, did you end up ordering one? Or did you walk away?
The answer is no.
Okay.
Because we're buying it. My wife's retiring in 23, so we're getting ready, because before she retires, she has to buy a car and she has to pay for it. So that's a joke around here. So we're trying to figure out. We know exactly what day she's going to retire, right on her birthday. So we're trying to figure out when to place the order. And it's not 14 weeks ahead anymore. It's 6 months, and probably more like 7.
Mm-hmm.
So we have to go back 7 months from her birthday in 23, and that's when we're going to order the car. So,
I see.
Yeah.
Okay. So you weren't necessarily planning on, regardless of what the lead time was, you weren't planning on placing an order when you visited. It was just a
No, it was just to see if, fitting the new vehicles that are out, see if I could get in one, see what kind of lead time. I thought, because I had heard about the chip shortage, but I didn't think it was that horrendous. And just to see what was the latest on the models we were interested in. And I think there's, I think probably I'm more, I'm a big time planner, which is probably more the exception rather than the rule. I think you're going to get a lot of people that just go to the lot and oh, this is a nice vehicle. I'll take it.
Yeah,
That's what you're going
that's
to get
me.
more of. Yeah. So the point being that there is no inventory for people to choose. So they'll
Right.
come back to the lot, and they'll this isn't going to last forever. This lack of supply. I'm positive they're working as hard as they can to fill the gap. So I just see their sales. I don't see their sales going down. I just don't. Not for
Right.
at least 12 months.
Right. Yeah, I guess my thought was, would that backlog turn people away? And then thought is, there must have been a reason why they were out, going to be purchasing either fleet vehicles or individual ones. Does that demand, or is there any way that they would fill, scratch that itch some other way? And I think even the used car and used truck market is tapped out. I think those prices are, much higher than they are in general. So there's just an overall shortage.
My son looked.
Yeah, I agree.
Mhm.
My son looked at a new truck and a used truck, 2 years old, he outfitted in exactly the same way, and the used truck was more expensive than the new truck.
Okay.
Okay.
Yeah,
Reverse
because part of
depreciation,
the
that's great.
reason. There you go.
Go ahead.
Yeah, part of the reason of going was to figure out if her current vehicle breaks between now and then, what do we do? And then it became very clear we just have to eat it, and we have to fix the vehicle. There's no choice. I mean, you can't buy used. There's nothing. For brand new, forget it. So the cheapest way out would be to fix it if something big goes. And yeah, no.
Mhm.
So I was interested in whether these guys work with other fuels, gas or hydrogen, and the answer is yes, they do. They're working on a hydrogen engine and even fuel cells. So they're on top of it. If it's an engine, they'll build it. So I think it's an excellent company. I had a hard time getting them into the buy zone, but I didn't try that hard. They're very close to the buy zone in my SSG.
When I presented in June, I demonstrated the Silence method of using value line, where you take the 2021 sales and earnings per share, and you look at their projection, and you take the compound annual growth rate of 4 years. And using that method, I come up with a sales of 6.4% and earnings per share of 5.8%. Which is, of course, lower than the 8.5 and the 7 that is being used by the annual rate box in Value Line. So using that more conservative method of coming up with sales and earnings per share, and still using the high and low PE that Steve used, I have it in the hold zone.
Is it well within the hold or just on the border?
Hold on, I'll tell you. I have a buy up to 227 and it's at 233.
Okay. Yeah, I looked through in TD Ameritrade. They offer, some links to other, I guess, analyst reports, and that was kind of a mixed bag. Some of them were neutral. Some of them were saying, accumulate. Some of them were saying actually reduce. So that was very helpful. Looking through some of the news articles, I think there was more talk about like the dividend level than there was jump in at this price sort of thing, at least from what I saw. But yeah, that would be my concern is are we buying it at a good enough deal to make our money back?
I have it in the hold zone, and Value Line had said that they thought that it would not appreciate much in the next 6 to 12 months. They said it's likely to underperform during the next 6 to 12 months, but it might appeal to buy and hold accounts, which is interesting because it sounds like, Steve, what you're saying is you think that it's actually more of a short term, something that is going to possibly be more of a short term.
Yeah, I think definitely in the next 12 months, you're going to see a surge in the stock. They're going to have good earnings. So, yeah, definitely for a year out, I see this stock doing pretty well.
And what did you say? You thought the growth was going to be like 14? That was going to be the return?
Let's see. Yeah, the compound annual total return of 14. That's what my SSG comes out.
I'm inclined to take a pass on this, given that the growth isn't really spectacular. I mean, I think that Better Investing says look for 15% or more, and the fact that it's in the hold zone for a lot of people, and I guess the buy.
Yeah, there's no doubt it's not a raging growth stock by any stretch, and they have a dividend, which is something that usually we'll get either a no or a low dividend, and this dividend's pretty beefy. It's 2.2, almost 2.5%, which is huge. So they're not pouring that back into the company anymore. They're giving that out, that's a lot of money going out every quarter now. So yeah, no, is it a raging growth stock? No, but it's solid.
This rule of thumb about 15% was not meant to apply to individual stocks. It was meant more for the portfolio. And actually, the rule of thumb is to beat the market by 5%. And if you think the typical market is 10%, it would be 15. But it's really dependent on the market.
Yep. Hi, this is Sriram. I just wanted to chime in my 2 cents. My evaluation is also on hold, not as close as some of you are. I think I am about almost $30 below the current price, my upper end of my buy zone. What I really like about this company is it's a proven company. The dividend is pretty good, and Steve's observations and his practical input on this seems to swing me towards, heck, take a look at purchasing it. One more area is I don't think we do have too many companies in this kind of industrial machinery sector. I think that's a good from a diversification point of view, but being such a large company, probably that counters because we already have a pretty bloated large sector. And again, going back to Ira's presentation from last week, we are looking at something that is probably at the higher end of the cycle. So I agree with if we have this as a long-term holding, but don't expect spectacular results, that will be 60% next year or 2 years from now. I think we'll be okay with that. But another thing is probably the price may not go down into my buy zone anytime soon. So comes back to Brent's question of is it in a value where we can actually make some decent profit? That's my 2 cents.
And what's your answer to that question, Sriram? Do you have one?
No, I don't. Again, according to my, probably not, but according to what Steve convinced us, probably it is.
Mhm.
What is your buy range up to, Sriram?
Mine is just about 201.
Okay. Okay, any other comments? Okay, great. Just a question, Ira, what spreadsheet was this from? Was this the Better Investing stock screen?
From Investment Advisory Service.
Gotcha. Okay. Okay, great presentation. Thank you, Stephen.
I'll interrupt here. I finally got the Torbenson presentation that Sriram did to upload to handouts. For those that we had some questions asking about getting it, so I kept struggling and I finally got there.
Gotcha. Thank you.
Thanks, Joe.
Okay, let's move on now to review of our current holdings. Jack, can I give you presenter rights to put up our portfolio?
Yep.
I don't know if you guys got my email. I have to leave today by 12:30.
Okay, why don't we, should we start with you as far as the current holdings?
Yes, please.
Okay, go ahead.
Okay, let's see what we have here. So FSFG, I have them in the buy zone. They have been downgraded on the technical by value line to a 3. They have declared a 3-for-1 stock split as of for stockholders of record as of the close of business on August 31st to get 2 additional shares for each share that you own, and that it's going to be distributed after the close of business on September 15th. And they've also authorized a repurchase program. They're going to buy back approximately 5% of shares currently outstanding on a split adjusted basis. They don't have any timeline for that. Let's see, Larry Myers, their president and CEO, said the new common stock repurchase program and stock split are designed to facilitate the company's effective management of capital and further enhance the long-term shareholder value. So again, I have them in the buy zone, and that's it for FSFG. Middleby, they are in the hold zone. Value Line has upgraded the technical to a 3 on August 20th. They've downgraded the timeliness to a 3 on August 27th. They reported strong revenue growth for the second quarter of 2021. And let me see here. Basically, there are 3 sectors. Commercial food services, that had a 90.2% gain. The residential kitchen was up 65.2%, and their food processing was up 28%. The EPS is nearly 450% from what it was in the second quarter of 2020. And they've got a record backlog of $994 million worth of orders. The only thing, again, that might be a glitch for them is whether the variants will slow down the recovery from COVID, but they seem to be faring very well. So that's the news on Middle B. And then Alta. I have Alta in the hold zone. Value Line downgraded their technical to a 3 on August 13th. They recorded their second quarter results, and they did better in the second quarter of 2021 than they did in the second quarter of 2019. So they seem to be recovering pretty well from the shutdown. And they've upgraded their performance outlook for the rest of fiscal year 2021 based on the second quarter numbers. So that's it for Alta. I just wanted to mention one other thing that, even though it's not my stock to watch, I saw FleetCor has an action by the FTC against it, alleging fraudulent and deceptive practices, citing a violation of one of the FTC acts. The company hasn't responded to it, so that might be something to watch. So I just wanted to put that out there. So that's it for me. Thanks.
Okay, thank you. It was of the three, only FSFG was in the buy zone?
Right.
Okay. Okay, thank you. And just before you drop off at around 9:30, I have you down for the stock to study presentation for October.
Okay,
We're
great.
still on top of that. Okay. Okay. So then I'll jump back to going over my things. Yeah, for the FleetCor, like you mentioned, I think I talked a little bit about that investigation last month that the FTC accused FleetCor of, quote, fleecing small businesses. It sounds like that there's not a whole lot of details, I guess, because they're probably, held by lawyers to not say much, but this same sort of thing was attempted back in 2019 by the FTC, and Supreme Court ruled in FleetCor's favor that the charge wasn't applicable under the section number that they used. So I think this is a regrouping by the FTC to attack them again. I don't personally know if there's any merit to it or what's going to come of it, but yeah, a good thing to keep watch of. Although I haven't seen, when I reviewed the headlines for this month, it was pretty light as far as news goes, and really nothing new mentioned that I could find on it. The one thing I did see is that Cambridge Global Payments is partnering with AMI Strategies, which is an industry leader in enterprise expense and mobility management, to provide AMI's customers with access to best-in-class international bill pay capabilities. So that's another, I guess, expansion of their clout. I currently have FleetCor in a hold. It's $260 per share currently, and the buy is up to $233. And then Tractor Supply, they're still going gangbusters. I think they're at the 52-week high for share price, so well past our buy range. And they announced the return of their annual Pet Appreciation Week, which is always good. But no value line update, no quarterly update to report on, so not a whole lot of news here either. So both of mine are in a hold range. Steve?
Hi. So I guess we'll start with Alphabet. My SSG has it in the hold zone. I have alerts on the stocks, and I kept getting 52-week high hits. It's at a 52-week high, 28.38. The only risk to this company is Elizabeth Warren. who she got together with other senators and sent in a nasty gram to, because she wasn't thrilled that Facebook and Alphabet were getting together on advertising. So heaven forbid the companies actually talk to each other. So she's like the only risk to this company. This thing is going to roll. And if Waymo hits, if the self-driving hits, this is going to, I mean, it's just going to rocket. Barron's has this, there's 45 analysts that follow it, and then their projected high prices, 31.89. So, and its Altman Z went down, actually went up a smidge from last month. It's at 14.17. The previous month it was at 13.89. This thing is it's a juggernaut, and don't get in the way of it. Visa, I have them in the sell range. They're in the third quartile of their 52-week high. They reported a slowdown in U.S. spending because, of course, they're sensitive to it because that's how people spend on the credit cards. So they can see that there has been a change in momentum, and why? Because of Delta variant is peeking its head up. So wife is a nurse, and August 1st, Delta started coming back to the hospital. It was like a little switch went on. And it's since kind of calmed down, but it's still, it's not good. There was nothing from July 31st to almost April. And then all of a sudden, August 1st, Delta's around. So it's not good. It's slowing the economy down, and Visa is going to get slowed down a little bit by it. 38 analysts follow this on Barron's, and they have a target price of $279. This one's Altman Z went down a smidge to 7.16 versus 7.37 for the previous month in August. There was a little bit of news in the sense that they have a green bond, a $500 million bond, and they're trying to retrofit their buildings so that they're net zero emissions by 2040. So at least they're trying there on the environmental front. If we zip over to D.R. Horton Incorporated, DHI is the only one of my stocks in a buy range. And it's a buy up until 118, and I think it's currently at 103. It's off the 52-week high, and let me get my other. There we go. Now we're on the right DHI. Yeah, it's a buy up to 118. The 20 analysts that Barron's asks have this as a target price of 113, and I think it's 80 something right now, 89 I think. And this Altman Z went down a smidge. Now the big story with this is there were a lot of articles lately, surprisingly, about this, that they're actually only being limited by materials and labor, because the demand for the houses are there. It's just they don't have the physical materials and labor to build as many houses as they want. So they just can't scale. And this is affecting all of the house builders, not just them, but they're in the articles that I read, they're always mentioned that they're the largest, or if not, they're not the largest, they're one of the three largest. That's what I've got. Thank you.
Okay, thanks, Steve. Ira?
So CBOE, the only news is their August options volume was up 15%, and their index options, this is year over year, index options were up 28%. So they're doing pretty well, and I have them in a hold range. They're at 126. I have a buy up to 108. On Regeneron, there's nothing new that I saw. They're in the hold range. They're at 650. I have a buy up to 633.
Okay, thank you. Jack?
Dollar General reported on the 26th of August for the second quarter. And they reported $2.69 per share earnings versus $3.12 from last year, down 13%. Sales were down slightly, 8.65 billion compared to 8.68 billion. So that, and the reason is that fewer people were coming to their stores. It was a traffic thing. The same store sales were down 4.7%, I think, from 2020, which was actually less than expected by analysts. Expect to have opened, they still expect to have opened 1,050 new stores during this fiscal year. And they're keeping their 42-cent dividend, and they repurchased 3.3 million shares during the second quarter. They're in the hold zone for me at the moment. They're down a little bit from last month. SFM, I got their, I re-examined them and Dollar General or ITIC this month because I always do that after I look at a new value line comes out. So it came out in July or early August or something, and so they are predicting essentially flat earnings for the next 5 years. Very low, like 0.1% change in or increase in earnings. And that's on higher sales. They're expanding. They expect the sales to go up, but they don't expect the. They expect the foot traffic or the per store traffic to go down a little bit. And I'm not sure why they expect that, but that's so. On the basis of that, I revised my SSG slightly, and they're now in the hold. I have them in the hold zone. They're going to report earnings for the next quarter on October 26th, for the quarter 3 on October 26th. So there's no other news for them. ITIC is in the hold. I'm sorry, in the buy zone, and they actually didn't change much. So I don't have their the buy price offhand, but same as it was last month. I'll find it. And no other news for them either. They're a very small company and they have odd reporting. Many of the things that I get for other companies, I don't get for ITIC. Sorry, go ahead, Brent.
No problem. Just to go back on for the Sprouts or SFM, it was SFM that was saying their earnings are going to be flat for the next 5 years, or that was like analysts saying it?
Value Line said that.
Value Line. Okay. I mean, is this making it
And
a
Morningstar has, which is what you can ask Morningstar to populate the projections, their projections onto the right onto the SSG, and they're just flat as a pancake.
I mean, is it something that we consider selling them if
I think
we're not-
so, because I was trying to figure out what's going on that's different, and I couldn't find it. It's just that the projected earnings, what had happened before, what the projections before, where it's going to have a little dip as the essentially panic buying from last year subsides, and then it's going to continue its rise up. But what's happening now is that the little dip is going to just be flat for the two of those will combine to give you no growth at all in earnings anyway for the next 5 years. So that was a little disturbing, and I think if we have some better option, we should take it.
Okay. Yeah, we have a little bit of profit in it already, but okay.
Yeah,
yes, I
it's
didn't consider.
nothing to crow about, but yeah, we have $1,500 almost in profit at the moment.
Right. Okay, we covered Liz already. Sriram?
Quickly, the two holdings I'm watching, INS and SGC, both of them are in hold zone. Currently, INS is at, I believe, 38.60 something, and my buy is up to 33 on that. Again, I think I gave you a list, a report last month that had details of this, but nothing spectacular, nothing to worry about, as well as nothing to be ecstatic about these two. SGC, again, they're projected to give us a pretty decent, I lay about 40 cents per year dividend on it. So I think, again, it's also in hold. Buys up to 22.30. It's at about a little over almost $24 now. One thing I want to note is both of the Altman Z's have gone up a little bit, 19.9 for INS and about 3.67 for SGC. So again, nothing we need to do at this point with these two holdings.
Okay, thank you. And then I guess we have the watch list. I added AQN to the bottom of it on the agenda.
So the watch list, according to my numbers anyway, everybody's a hold except for Nexstar, which has gotten itself in the buy zone.
Okay. Well, I'll open up the floor to any buy or sell recommendations.
I suggest we put our current cash in Horton. It was a screaming buy at 66, but it's still a good buy at 89.
Okay.
I'll agree with that. We don't own, we own 6.8% of the portfolio is Horton. That's not too much.
Yeah, I've been holding out hope that it would dip back down to the 60s or so, just long enough for us to buy more, and then it goes back up, but that's probably not realistic. So yeah, I'm okay with investing our cash on hand into that.
I would go with that. And now I'm going to sign off. Thanks, guys.
All right, thanks, Liz.
Bye, Liz.
Bye-bye.
Bye, Liz. Yes, and I agree with that. I think it's a potentially good purchase. Yes, even at a higher price. That'll bring down to about 77 or 78 the price, but we're only, yeah, actually we have a lot more than that. Okay.
And I don't think the needle won't budge too much,
Yep.
right? It's going to move it up to, what's an equivalent one, like probably 6% or so, or no, mid 7%. As far as percent of
Yep.
total.
Yep.
Yep.
Okay. Do we want to act at all on Sprouts, or maybe regroup and visit it again next month?
I think it's okay to hold it until we find a better place to put the money.
Yeah.
Yes, I think maybe we can recommend Liz to compare her stock next month with probably Sprouts.
Okay.
I was just looking at my SSG and the value line, and I got tricked by the thing that value line does, where they give a growth rate and then they tell you what they think the earnings are going to be in 5 years, and their growth rate is like 6%, 7%, something like that. 5.5% growth for earnings, but they show $2.30 per share earnings in 24-26 compared to 2020's $2.49. So they show a 15-cent or 14-cent decline in earnings in 5 years. And I missed that because I looked at the growth rate that they calculated actually starting a couple of years ago to about 23, 24. So anyway, they fooled me.
Right.
So Jack, I have a question.
Yeah.
So I just want to make sure that I understand the situation with Sprouts. So I'm looking at the SSG for it, and yeah, they've had a couple of bad quarters. So is what you're saying that S&P is extrapolating that they're not going to have the growth that that they had before? Is that?
Yes.
Because I mean,
that's what they're saying.
Okay.
And let me show you their SSG. No, where the heck do they go? They're here somewhere. There they are. Sorry. So this is what they show. You can still see, you can see on my screen, right?
Yep.
So the earnings are, I'm sorry, the sales go up a little bit. So they're growing some. The projection actually doesn't grow very much. This projection doesn't grow very much, but the Morningstar projection has them growing a little bit. But the Morningstar and the Value Line projection for their earnings is basically flat. From here, they're at $2.31 by the end of this quarter, trailing 12 months. And in 5 years, they're going to be at $2.30. So that's,
yeah, I guess where my confusion, Jack, is that I get my data from Stock Central, and and they have them at 14.8% sales growth and 14.8% earnings. So I guess that
Well,
is,
yeah.
yeah, maybe
I
my
will
subscription isn't as good as it once was. Maybe I need.
Well, I will
this
investigate this
subscription.
some more. I don't, like I said, I don't think there's any reason to sell it on an emergency basis, but, and this could easily be just a data glitch that I'm not catching, that I haven't figured out yet. But I
Stock
found this
Central,
concerning.
Stock Central's information comes from Morningstar.
Yeah, I don't know what they're
Okay.
doing, because as far
Yeah, I
as
don't
I
know
know,
what
this is a
happened there.
Morningstar dot.
Okay.
Where's, let me.
Yeah,
where's
I mean,
that,
I've seen the store. I didn't go in it last December when I went to Florida, but at my place. But the parking lot was full. So
Yeah.
I don't know. It looked like a very, very busy store. It's very close to my place in Florida, and I don't know. It looked pretty darn busy to me. You know.
Okay, well, we'll leave it as keep an eye on it. I won't panic yet, but we'll, I guess, review it in future and see if you find any, like you said, calculation glitches or anything, or if it's something we need to investigate further.
Okay.
Brent, we have a question. Can you name a few of the news sources that the club members depend upon? The ones that you have confidence in over the years of the club's existence?
The news sources?
Yes, sir. That's the term Leslie used.
Okay. I'll speak just for myself. What I use is like an accumulator. It's finviz, finviz.com, which has a nice kind of combination of price charts, key metrics, ratios, and then an accumulation of links to various websites. I think a lot of them are through Yahoo Finance that it goes through. Some Barron's in there maybe. So I don't particularly look at a individual source. I tend to kind of cast a wide net, and if 5 out of 6 are saying this is a horrible company and the 6th one is saying buy all you can, I tend to discount the the one outlier. But as far as a individual name of a news source, I don't really have one to offer, unfortunately. What do some of the other members use?
Yeah, I just use the either, it used to be Ameritrade, and now it's now I use Fidelity's news accumulators. Although it's so you can click on the stock you're interested in, and it'll send you to a list of news articles in the last 30 days or however long.
Mm-hmm.
I use the same sorts of things. FinViz, I use Fidelity, TD Ameritrade, I still have access to, Seeking Alpha, and then I use the Investor Advisory Service and the Small Cap Informer for information also.
Yeah, those are all well-known, well-trusted sources.
Thought I'd show my screen about Sprouts here. You can see my screen from Morningstar.
Oh yeah, if this is your screen, yes. Mm-hmm.
Yes.
Yeah, this is the latest from Morningstar.
Yeah.
Okay, we do not believe the near-term underperformance has significant implications for the longer-term turnaround. Okay. All right, I'll step back from the cliff then.
Yeah, I think
Okay.
I think we have to go back to the mode we were about a year ago. We expected all these markets and the whole economy to be in a different location than we are in now. Some of them they
Yeah.
are, but some of them they are not. So I think we need to look from a longer perspective what will happen after the markets open up.
Yeah.
Okay, anything else on buy or sell decisions? All right, moving on then, I'll have us jump back to our agenda. For old business, just wanted to touch on the club renewal. I think, Jack, you had sent the form to Ira. Ira, have you received that?
Yes.
Okay.
Check is in the mail.
Check is in the mail.
Yay.
Perfect. Excellent. Okay.
And everybody else has to renew their own personal membership themselves, right?
That's correct. This was just a club dues renewal.
Yep.
So any non-lifetime members need to do that separately through their own accounts.
Yep.
Yep.
Okay. And then the new business we already talked about, that was the tax lot report from Joe. It sounds like, Jack, that'll be something that you can hopefully maintain, that we can look at, and if it becomes too much of a burden, let me know.
Yeah, I think it'd be fine.
Okay.
And I think it'll mesh nicely with the Torbeson sheet.
Mm-hmm. It seems like that would dovetail quite well into, Bivio itself. I'm disappointed that they don't have something like that, because it seems like all the calculations that would be needed are already in our Bivio account.
They're kind of there. Yeah. I'll investigate whether I can massage those numbers I can get out of Bivio so that it looks like the report I just showed.
Right. Okay. And can you send that file to the members? I'm curious about some of the calculations.
Yeah, I'll send it to you guys, and I'll put it up in the Bivio communication somewhere.
Okay. Thank you. Any other business items we need to talk about? Okay. For October, Liz is up for stock study. I'm on deck for the educational segment. And then at the end of the agenda, I list just for reference the next 4 meeting dates that we have. So if there's no...
It's early next month.
Yeah. And it's already October. It's amazing.
Yeah.
Okay, and so if there's nothing else, thank you all for attending. Like I mentioned, we meet each month, second day, so our next meeting is October 9th, 11 a.m. Eastern. You can find in the near future this recording as well as previous recordings of our meetings on YouTube if you search for Yankee Model Investment Club. If you're not already registered, register for the meeting series at betterinvesting.org. You can also search betterinvesting.org for Visit a Club, which is a great program for investment clubs. And then if you have any questions that we didn't answer, interested in joining us, contact Freerom, our secretary, at his email address there, and he'll be happy to answer any questions you may have. And with that, I'll say thank you for joining us. Hope to see you again next month, and have a great September.
Can I get you guys to hang around after everyone else, after the attendees drop off for a few minutes?
Yeah.